how much of the good news is already priced in by the markets given all of this optimism? And are we expecting more sentiment reversals this year?
Well, markets are certainly a bit cheaper than they were 12 months ago. And so that, I think, provides a cushion against further market drawdowns. But what we saw in 2022, as we look at the year in total, I think sets us up well to prepare for what 2023 is going to throw at us. So I would characterize all of the main things that we found really important to think about how individual stocks performed last year, to think about how sensitive they are to macro risk, how they might perform in a market drawdown and elevated market volatility, and then how sentiment may be shifting in the many dimensions that we measure investor sentiment.
One of the criticisms about all of this optimism has been that even when we touched the market bottom in October, stocks weren't necessarily cheap on the S&P 500. Where do you find value in this environment, and what are your most preferred sectors in 2023 that can withstand this volatility?
Yeah, well, if we look forward, and I think we expect that the high volatility that we saw in 2022 to continue. So we are going to see, with that high volatility, sentiment reversals likely to keep repeating themselves like we saw in November. So with that in mind, we think it's very important to balance any exposures to stocks that have positive investor sentiment with high quality and with value within the market, and to also balance between defensive positions and with cyclical positions. And so when we look at our portfolio and where our preferences lie, they really are all about that balancing act. So for example, on the cyclical side, we quite like consumer services, we quite like energy, and also tech hardware. But on the more defensive side, insurance stocks and some of the banks, pharmaceuticals, food retailing, we see some good opportunities there. So really the balancing act is of utmost importance for us this year.
In terms of tech hardware, we're going to be hearing from Intel this week. Microsoft's also going to be reporting earnings among some other big tech names. What are your expectations around some of these big companies? And do you think this earnings recession that we often talk about is going to come to pass?
Well, I think that the thing about the tech hardware sector is that compared with some of the other parts of technology sector, so that industry group specifically, we just find it's much easier to find companies with stronger cash flow that have really reasonable valuations. In the software area, we just found it hard to find things, even after these drops, where we think the value is strong enough and the sentiment is positive enough to really invest. There's a lot of negative sentiment around the software industry and layoffs, but tech hardware seems to be just much more resilient with regards to their balance sheets, with regards to cash flows, and we've just found more names from a bottom-up perspective that tick all those boxes for us.
I'm just wondering what you prefer at the moment in terms of regions. Do you look at US equities right now, or we have a chart here on the Bloomberg terminal showing bearish options supporting future declines for the US dollar? That's another theme we often touch upon. Do you look offshore instead of the US? What's your preference?
Yeah, absolutely. I mean, the US market is so broad and has so much variety that there are always awesome stocks that we can find in the US market, both in large cap and small cap. But we actually look at all pockets of the world, emerging markets, even in emerging markets, small cap, we find a lot of really good opportunities there from a value standpoint, from a domestic, less leveraged to the global economy. There are some really great opportunities, even in emerging market small cap, that we see. And conventional wisdom would have you say a quantitative manager, how can they evaluate such a niche part of the market? Well, actually, the beauty is in being able to apply breadth in portfolio construction to emerging market small cap. There's so much opportunity there.
Does it help also that we're seeing a little bit more pessimism on how much stronger the dollar can get now that we're nearing fresh year lows?
That certainly helps. That certainly helps the rationale. We see a lot of investors really thinking about, from an asset allocation perspective, if their emerging markets is where they need it to be. That's been a source of, I think, somewhat stress in the last couple of years. Heading through the pandemic, how emerging markets would be. They've been so resilient through this whole pandemic period, compared with, I think, conventional wisdom would say about that asset class.
Not to mention, of course, the Chinese reopening and how big of a player it is in the EM indices. Is that a big part of the equation?
Yes, but again, I think diversified exposure in all markets is important. We think that there's a lot of macro uncertainty that can be at a country level, and so we like to really focus our positioning from where do you find good companies, and keep our country positioning that can be influenced by some geopolitical or local fiscal issues or just local issues that can really crowd out the beauty and the performance that can be obtained from bottom up stock selection.